Hey guys, welcome to my video on how to trade Bitcoin for beginners. In this video, I'm going to go over a trading screen, tell you what everything means, and then go through some very common technical analysis techniques that traders will use when they're starting out, maybe going into a trade. So for this one, I'm going to use the Binance trading screen. That's not to say it's better or worse than anyone else, but they are the biggest currency exchange, so I thought I'd just choose that one to show you. But to be honest, if you're using other screens like Kraken Exchange or Coinbase Pro, all of these are going to be more or less the same. A trading screen does have a set layout. Some things may be in different places, but they are more or less the same. We'll go through what everything means and how to do everything then, and I'll put the timestamps for all the different techniques and areas in the video description, along with a link to Binance. If you're not signed up yet, you can go and sign up through that link. So everything will be in there for you. Let's get first into what this trading screen actually means. We're on the Binance homepage right now. You can click that link in the description to go through to here and see everything. You don't even need an account to go and see the actual exchange, which is really great. We come up to trade and then we come to advanced, and this is going to open the trading screen for us. Now, this screen is going to look slightly different depending if you're using Binance or Coinbase or whatever, but the basics are the same. The first thing we have to do is go and choose a product to trade, or what's known as a currency pair. When you trade currencies, you have to trade in pairs because you are buying one currency, and that means you have to sell another currency. You can't buy and sell the same currency, of course, because there would be no reason to do that. So if you do want to buy Bitcoin, you can see up here BTC against the US dollar tether. Now, the US dollar tether is a cryptocurrency that is supposed to follow the US dollar in value 1 for 1. So whatever the value of the US dollar is right now compared to Bitcoin, the US dollar tether will follow that exactly. And the US dollar tether, this is something that you may have to actually get. So if you're transferring fiat currency in, you may have to transfer your US dollars into US dollar tether, and you can trade that against Bitcoin. You can see all of the different coins that we can trade against the US dollar tether right here. Now, if we go over to BTC, you can see that you can trade other coins against BTC. So you can come down and we'll scroll down all the way to E and we'll see Ethereum. We can scroll down to ETH against Bitcoin. So in this instance, you would actually be buying Ethereum and selling Bitcoin. So if you had Bitcoin on account, you could sell that and buy Ethereum. The reason why you would want to do this is really to trade in pairs. So let's say you think that both Bitcoin and Ethereum will do well over the next year and they will both go up. Well, they can't go up the exact same amount. Maybe you think Ethereum will outperform Bitcoin this year. And so actually what you could do is sell Bitcoin and buy Ethereum because relatively you think Ethereum will outperform Bitcoin. Anyway, that's kind of the fundamentals of why you would trade currency pairs. Now, of course, if you just want to buy with fiat currency, then you may want to buy both of them, but that's not really trading a currency pair. For this one, I'm just going to make it simple. I'm going to go up to fiat and I'm just going to choose BTC against the US dollar. So we're buying Bitcoin against the US dollar to make it simple. Let me go through the trading screen right now then. So you have this graph right here. This is a candlestick graph. Anything in green is an upward movement for that time period. Anything in red is a downward price movement for that time period. And you can choose any time period that you want. We're on 1 week right now, but you can go to 1 month as well. You can even go to a 1 hour chart. So each bar will represent a different period of time. For a 1 hour chart, these candlesticks are probably 1 minute or 5 minutes. So this is a 5-minute time period right here. The bottom of the candlestick will be the lowest price and the top of the candlestick will be the highest price in that period. And then at the end of that period, the candlestick will be made, and whether the price was up or down in that period, it will show you either green or red. So you can see that in this period, the price started up here and it went all the way down to here within the period. And at the end of that period, it finished right here. So it made the candlestick. We can change this back to 1 month. What you can see at the bottom right here is trading volume. That's different to the price. Above here is the price action and below here is trading volumes. It's important to see both of them because if a move is going to the upside and there's a lot of volume, that's a good thing. If the price is moving down and there's a lot of volume, that's usually a bad thing. If the price is going up on thin volumes, that's also not a very good sign because trading volume is extremely important, not just the price. The reason why is because a price can be very high, but if there's no volume there, then it's not going to stay there very long if maybe sellers come in. So we come now to the order book, and the order book is a book of orders. So you can see every single order that is in the market right now. These are traders and orders on the book. The red, these are sellers, and the green, these are buyers. Now, buyers will always be below sellers. Sellers want to sell their stock or their currency at a high price, and bidders or buyers want to buy at a low price. And the price in the middle, you can see right here, this is what Bitcoin against the US dollar tether is trading at right now. You don't really have to know too much about the offer side or the bid side. In America, this is called the ask. All you have to know is what the middle price is and where you want to trade at. So that's the order book. These are all the sellers and the buyers right here. Now we can come to some different options. These options are for futures, and I wouldn't recommend trading these on Binance. This is going to be way too complex for this tutorial. So we're just going to stick right here on spot. The spot market is the one that you're going to want to trade. There's no futures and there's no derivatives. There's no borrowing money involved. So spot is the one you want to trade. We can then come over to all of these right here. So this is the current price of Bitcoin versus the US dollar, 37,000 US dollar tether against 1 Bitcoin. So you can come to the 24-hour change price. So we're up 3%. The 24-hour high and the 24-hour low. That will just give you an idea of where the trading range is for that day. And then the trading volumes as well. Not really important to know too much other than that this is the most actively traded cryptocurrency right now. Before we get into buying and selling and putting orders in the market, then you may want to go through some charting techniques. So I'm just going to use the 1 week chart right here to show you. And you know, cryptocurrency, it moves very strongly. So charting techniques, you know, they may be just a guide, but the first one I want to go through is moving averages. And you can actually see right here on the chart that you get some moving averages already that Binance put on for you. The first one is a 7-day moving average. The second one is 25-day. And the third one is a 99-day moving average. And you can see that right here. So an MA is a moving average. And what this does is it just takes an average of the prices over the time period and then plots them on a graph. And these will always really give you an idea of a smoothed out price move. And it's just something that traders will look at straight away. And I used to trade with, I think, a 10-day and a 30-day moving average. You can play around with these. Different traders have different moving averages that they want to use, but you can come up and change these very easily. So if you come to the 7-day moving average, we can come through to show or hide. So that will obviously hide it if you want to. And we can come to format as well. So if we come to format, you can actually change this really easily. Go to length, maybe change that to a 10-day moving average. The source is the closing price. I would recommend that one. So they take the closing price for the day and then use that to make a moving average of the prices. We're going to click OK like this. This will not change too much. 7 to 10 day, you won't see that on the chart. But essentially, the smaller the time for the moving average, the closer that it will actually track the closing prices. And the longer the moving average, the more smoothed out and the less it will be affected by daily price moves. So you can see those. They're a really good way to essentially just see maybe levels of support and resistance for the chart. So if the chart is moving down, you'll come to maybe a 25-day moving average and you will see that as a line of support. And if it does get there and bounce off, that's usually a positive sign that's going to move up further. If it breaks through that moving average, you may think it's going to move down to a next moving average. On the left-hand side here, we can very quickly make a trend line on the chart. So I've just clicked this trend line right here. I'm going to use that. Then what you can do is just press once on the chart like this, and then you can use another point on the chart to make the trend line. So I've clicked twice there. Now, can you really make a trend line on this graph? I would say not. It's just a parabolic move up, but this is how you draw a trend line. So you can move this around and say, this should be support. You can just move this to support levels where there have been down moves and say, this may be a level that you can draw a trend line on. Just going to get rid of that. Let's go to a 1 hour chart. This may be easier to draw a trend line on. Now this is a move to the downside right here, and it moved down again right here. So you can just draw this trend line on and say, well, actually the chart may actually come down again to this trend line and then move off it. So that could be used to enter into some trades. Next one I'm going to touch on is Fibonacci retracements. And this is a very popular tool used by traders to really see lines of support and resistance in a chart. Now you can see with the Bitcoin chart, it's kind of unchartable, to be honest, but I'm going to try and use Fibonacci to show you just that you can use this on any chart that you're looking at. So we'll come over to this option right here, and there's lots of different options in here, but we can choose Fibonacci retracement. So we're going to click on this one. Then you have to choose a high point and a low point for a particular trading range. So I'm just going to use the 12-hour chart on this one and show you. So I'm going to choose this high point right here, and then I'm going to choose a low point. We're going to come down to this part of the chart right here so we can see. And I'm just going to drag this along like this and drag this around so we can actually see it on the chart a little bit better. So you can drag this from the high to the low point, and the Fibonacci retracement levels are supposed to give you areas of support and resistance in the chart. So they will retrace from highs down to lows in certain measurements. So I think they're 24%, 38%, 50%, and a few more as well. But it's supposed to give you areas of support for the downside and resistance for the upside. Like I said, with the Bitcoin chart, it's kind of difficult to do right now. But if you can see this as the high, and then you can see some different trading ranges here. So actually this retracement level, you can see the price bounced off it a few times and never really went through it, which was a positive sign at the time. That really says that at this price level, it met with some support, and you can see it did actually in fact go to the higher side right there. And then it tested going down again, actually broke through this level, but did not again make it down to this level, which is again a positive sign that buyers are coming into the market and supporting the price, which is why you can see that it's actually gone through this level once more to the upside. You have to use these retracement levels with other charting techniques, for example, trend lines. So you can see this is actually a high, and then the highs are becoming lower, which means we are in a slight downtrend. So even though it's meeting support at this level, it is making lower highs. So you could maybe draw a trend line. We'll do this and draw a trend line from here down to here. So you could see actually some further moves to the downside, as this line could actually act as a level of resistance going forward. So if it then breaks down, we can see the chart moving down here and correcting a little bit. Now, if the chart moves through this, then that's actually a positive sign. And then you could see the trend actually moving up. So if we draw another trend line, we could see this being support and actually the chart moving upwards. So you can see that you cannot predict the future with these charting techniques. It just shows you what happened in the past. But Fibonacci retracement is a nice way just to visualize levels and areas on the chart that may be used as levels of support for the price, or on the upside, levels of resistance for the price. They're really two very simple techniques though that I want to go through: a Fibonacci retracement levels and also drawing trend lines on the chart. And I think that's enough for this one. We can go through though and actually place an order. So how do you actually place an order on a screen like this? Well, you can go through to the place order options here, and I'm going to go through both options. One is a market order and one is a limit order. Let's go through a market order first. A market order is one where you do not control the price of the option that you're trading. So right now we are actually trying to buy Bitcoin with US dollar tether, and you can see the price right here. There is no option for me to change this. A market order only gives you the ability to choose the amount that you want to trade and not the price. The price that you pay will be whatever the price is in the market at the time that you trade. Right now, you can see it's 36,879, but it is moving around a lot. So you may pay a little bit more, you may pay a little bit less. You really don't know, and you have no control over that. You can go to the amount right here, and you can say, I want to buy 1 Bitcoin like this. You can see now that we are buying 1 Bitcoin at the market price. We do not know the price, but you can come through, go ahead and press buy on that one, and it will do it for you. You can also change this though to total. So if you go to total, it'll actually give you more or less the amount that you want to trade in the amount of US dollar tether. So you can trade this and you say, I only want to trade 500 like this. That's fine as well, but it will also not give you the price. You have no control over the price, but you can either say, I want to spend this much, so maybe 1,000 like this, or you can go amount and then choose how many Bitcoin that you want to buy, 1 or 0.05 like this. You can then go through press trade and you will trade. You do not know the price until you have traded though. If we scroll down, you will be able to see all of your orders here. So your open orders in the market, order history, trade history, and the amount of funds that you have on account. Now, if you actually go through and trade a market order, that will be done very quickly for you. It will trade at whatever the price is, and it will be done for you. So that will be coming into your trade history straight away. It will not be an open order because you will not need to work the order at all. But a limit order is different. Let's go through to limit order then. The difference with limit order is that you control both the volume and the price. So you can control both, and you can see that price comes up now. So firstly, you have complete control over the price. The price it's going to give you is the one that it thinks the market is at right now, or what it was when you press limit order, but you can have complete control over this. So you can actually change this and say, I'm just going to change to 35,000 per Bitcoin. This actually is now below the current market price. The current market price is 36,800 and you want to pay 35, which is obviously way below the market price right now, which means you won't actually trade right now. But we can go through this and just say, I want to trade that many Bitcoin. And then you can see it works out the total amount that you'll have to pay in the US dollar tether, because it takes the price that you want to pay and then just times it by the amount, and then it will come out with an amount that you want to buy. You can then go through and press buy. The difference is though, is that with a market order, you will actually trade that. But with this limit order, our price that we are trading is not the price at the market. We are below the current market price. And of course, you can't buy something for cheaper than it's actually trading at. And so what will happen is that this limit order will go into the system and Binance will work it for you, but it will be down here on the order book. Actually way down on the order book, because we can see these bids right here are cheaper than the current market price, but you are way cheaper than them. So what will happen is that you can come down here and it will actually be in your open orders. If you go ahead and press buy, it will come down here and you will see the date that you entered that order, the pair that you're trading, which will be the Bitcoin versus US dollar tether, and lots of other pricing information that you put in. So you can say to Binance, yep, I want to buy this stock, or I want to buy Bitcoin at this price. I want to buy this many at this price. And if the price does fall down there, then that will be worked for you. And if the price does fall, then you will go through and trade that. So that's the difference between market and limit. Market, you want to buy straight away. All you control is the amount, and then that will be done for you. With a limit order, you can put your trade on there. You can control the price and the amount. But of course, if your price is lower than the market price when you're buying, or indeed higher when you're selling, then you're not going to trade straight away. You'll only trade if the market in the currency actually gets down there, and you will see your open orders right here for you. Anything that's traded, of course, will just go through to order history and trade history for you. You can see everything in there. Do check out the description for some more helpful videos regarding trading and cryptocurrency. Subscribe also for way more crypto content and helpful videos like this, and I'll see you in the next one.